like I said, from the definition of what is liquidity, it in its simplest definition, it simply means what? Money. So when you hear liquidity as pertaining trading, it simply means it has to do with money, right? If somebody says I'm liquidated, that means the person don't hit SL or the person have lost money in trading, right? So whenever you hear liquidity in trading, it simply refers to as money. And here we have types of liquidity, which we are going to be focusing on three types of liquidity for today, right? So the first one we are looking at is trendline liquidity. Then the second one is double top liquidity. The third one is double bottom liquidity. And the fourth one, let's add the fourth one. The fourth one is so the fourth one is structural liquidity. Structural liquidity. So these are the four different concepts of what of liquidity. All right, so let's quickly dive into how it looks on the charts into our sketching. So from here we have this is an uptrend market, and when we talk of trend line liquidity, this is what we basically mean. When market is in an uptrend, right, price is pushing to the upside, and we see that price is pushing to the upside, right, retraced. We still have a demand zone below that we are waiting for price. All of a sudden, price continued here to the upside, right, leaving this particular level, not getting into our zone. Price just continued to push up, then retraced again, pushed up again, retraced again, pushed up again. So in the mind of some people, they'll be like, okay, price is breaking structures to the upside, which yes, is breaking structures to the upside, but at the same time, is creating what is called trendline liquidity. It's creating trendline liquidity below. So we can see why price is pushing up. You can see how price was forming this trend line. Remember, I told you that for you to mark your trend line, you need two touches, right? For a trend line to be accurate, you need two touches. Two touches, that is to say, if price is in an uptrend, let's say price is breaking structure to the upside, and you want to mark your trend line, right, you need at least a minimum of two touches for you to be able to validate your trend line. So if we mark our trend line from here, we have one touch, two touch, and we have the third touch. So here we have the first touch, second touch. So once you have first and second touch, you can now extend the line to as far as wherever it wants to get to, right? Then third touch. All right, so going back to our sketch, going back to what we have here, so we can see price forming this trend line level. All right, for people that trade with trend line, for people that trade with trend line traders, hence price have tapped on this one, tapped two. On the third one, they are expecting to take what? A buy. Why for me, I'm anticipating price to come and take out this trend line liquidity. So this is your trend line liquidity. This is how it looks like on in our uptrend market, right? So the same thing is applicable in a downtrend market. So same thing in downtrend market. So if this is a downtrend market, the same thing, right? We see price form a trend line level, right? We see 1, 2, 3 touches, right? Remember, what we need to validate that is a trend line is two touches, right? So we have first touch, second touch, and third touch. The next thing we anticipate is for price to come back, and for these trend lines to be validated, remember, we will have our demand zone. In this case now, we'll have our supply zone, we'll have an imbalance, then every other thing here becomes our liquidity level. Every other thing here becomes our liquidity level, right? So that's for trend line liquidity. Then the next one is we have double top liquidity. Double top liquidity, this is how it basically looks like on the chart. So we have price in an uptrend and price from a double top, right? For people that trade chart pattern, they are going to be saying, okay, markets have shifted structure to the upside. You see somebody that will come here, mark this as change of character. But in another way, it's not a change of character, right? Because we still have we still have our demand zone below, and we have an imbalance that price created. We have an imbalance, right? And then for us, this is not a change of character, right? But this is a correctional move to continue to the upside. So we have this double top liquidity here that we were anticipating price to take out as our take profit. So how we usually take the trade is you enter from this zone, put your stop loss below, and then you target that top, this liquidity, you target it as your what, as your take profit. So that's for double top liquidity. Then the same thing is applicable in a downtrend market, right? In a downtrend market, you can still see we have price in a downtrend, we have price break structure to the downside, we have price break structure to the downside, and then pulled back, but did not get into our supply zone. Then came back up, didn't take out the previous high, but price rejected and now came back to our demand zone. What are we anticipating to do from here? What we are anticipating is to take a shot from there. Take a shot from there, targeting that double top liquidity level, right? So then the next one is double bottom. So we have double bottom. Double bottom is inverse of double top. So double bottom is when the double liquidity is formed below. So in double top, you can see it's formed above, while in double bottom it's formed below, right? So you can see it formed this way. And what do you anticipate? You expect price to come and take out this liquidity level. And mind you, when you see this kind of liquidities on the chart, you don't mark here as break of structure, and then you want to come and look for your entry at this level. You are going to become a liquidity. That's why you hear some people, they will say price took them out and still went in their direction. You're going to become liquidity if you try this. And that's why this kind of charts patterns form, because people will always fall victim of it. Somebody will say this is a break of structure and we have our low, mark our demand zone, you want price to react from here and continue, but unfortunately price will hit you out and still go in your direction. Sometimes it's when price now hits you out, you now realize that there is a demand zone below where you entered your trade. So this is your double bottom. So the same thing is applicable in a selling market, right? So this is still the same thing. We see the double bottom here formed before our supply level, right? Once you see this kind of liquidity formed before a zone, is a clean trade to take. Like once it forms, your double top or your double bottom is formed before your demand zone or before your supply zone, that trade is going to be an A plus setup, right? Then the last one which I added is structural liquidity or structural liquidity, which I'm going to give the illustration. If market is in an uptrend, for instance, market is in an uptrend, so we got this. So if price is in an uptrend, let's say price is in an uptrend, and then we got this. Then we got this breakout structure here. And then we got another small tiny breakout structure, right? This in the same uptrend, right? This particular level here is our structural liquidity. Maybe you can even make screenshot of all these patterns I'm showing you, because you always see them on the chart. They always appear there on the chart. So this particular level here is your structural liquidity. This is your structural liquidity. This one is not double top, it's not double bottom, it's not trend line, right? This one will usually have one leg, and the one leg liquidity always form in a V shape. It always forms in V shape. That's how it's usually formed whenever you see it on the chart. And the V shape is always very clean and clear on the chart they're looking at you, right? So this is basically how structural liquidity tends to look. First of all, you might see a kind of a sweep of liquidity. You'll see a sweep below, or your breakout structure below, or your breakout structure below, and then you see another breakout structure above, right? Which is a change of character to the upside, right? So this will become your sweep of liquidity, because price took out that previous low that caused this breakout structure to the upside, right? Price took it out. So here, this level that price formed here becomes our structural liquidity, where we want price to take out and then tap into our demand zone for us to now buy the trade. So all these patterns that I'm showing you here, you always see them on the chart. Hence, you are trading SMC strategy. You always see them come out on the chart. You always see them show up on the chart. So it's very important that you know this. So you can just maybe you can just screenshot them. This one is structural liquidity. This is how you usually see it on the chart. Then this is double bottom liquidity. That's for the buy side. The same thing for the sell side. And then here the same thing applicable here is just an inverse, right? The same thing we have here is just the same thing applicable in the sell direction. So just to inverse it, let me just quickly do that. Let me inverse the chart. So it's just the same thing, right? It's just the same thing. You still want to see a sweep, a break of structure, then your structural liquidity, you look out for your entry. So then the next one is double top. You can screenshot double top. You usually see this on the chart. Then the same thing is applicable on the sell side. Then the next one is trendline liquidity. So whenever you see your trendline liquidity, you're anticipating to take your trade on your demand zone, targeting the high of that trend line, which is here, right? The same thing is applicable on the sell side. The same thing is applicable here. The same thing is applicable here. So this is the kinds of liquidity levels we have. And one of the reasons why you need to understand this liquidity concept is that it's definitely going to help you understand what you are doing and what you are looking for in the market. If you don't understand the concept of liquidity, you're going to be messing up in the market. When you understand the concept of liquidity, it will help you to know where you should enter your trade, right? So even if price did not, let's say this price, now let's say this trade is on the chart and you're waiting for price at this zone, you're waiting for price on this zone, then price came here and then start pushing up. You shouldn't jump because price came here and pushed up. You shouldn't jump in. Allow price to do whatever it wants to do. Sometimes you see price while going aggressive, the next thing you might see maybe something like news flash will just come, PM, take it out, stop here, and then still go back up. Just like the trade we took today on GBP JPY, right? You see that if I take you to the chart, let me quickly take that. So if I take you to this chart, this is the trade we took today on GBP JPY. Like this was we entered this one yesterday and held it while we still entered another one here today, right? So look at what happened on this chart. So we have this liquidity level here formed. After this break of structure, remember before you start marking your liquidity level, you want to see a break of structure to that particular direction of the market. If it's in an uptrend, you want to see a break of structure in that uptrend, right? After that break of structure, you now look out for your demand zone, then look at your demand zone or your order block, then you now start looking out for your liquidity. If there is no liquidity to validate that demand zone, then you have to wait. Price might likely create liquidity later or destroy that zone, right? So on this particular chart, we have this trade, right? So we got this liquidity level here. So this is our structural liquidity. This is our structural liquidity. So this is what we have. So after this break of structure, price pushed up, came down here, and then push up. We got all the push up all the way here. Then price tried to retrace, came back here. That's why I said, even if price starts buying from your liquidity zone, don't try to jump into that trade. It's going to be a trap, right? And while I was watching this chart today, I almost fall victim because when price came here, I saw this weak rejection. I was like, market should not leave me because I knew that market is going to buy, but I was waiting for it at this level. But when this candle wicked, I almost made a mistake of executing, and that could have been a very big mistake because if I had done that, price could have come and hit me because I could have put my stop loss below here, right? So look at what happened. Price pushed up aggressively as though it have left, as though the buy has gone. What next did you see? You can see an aggressive drop down back into that zone. So this is where the concept of liquidity is very, very important because if you understand it, it's going to help you to not chase the market but wait for the market, right? It will help you not to chase the market but to wait for the market. So imagine I was trying to chase the market from this level. This move, I could have seen this long push and I'll be happy that yes, I'm in profit. Market is going in my direction. Then I'll be waiting for price to probably another candle to pop out and then hit my TP. The next thing I'll see is price retrace with very strong aggression. And then what happened? To clear this liquidity level and tap on that demand zone and then push up. So right now, this is the next demand zone I'm waiting for price. So this demand zone I'm waiting for price. Now you see there is no liquidity. Price has not formed liquidity. The only thing we have here is just fair value gap, or imbalances, right? That's the only thing we just have here. That's the only thing we have here, right? So for me to validate this particular setup I'm looking at now, I need price to still form a liquidity level. Either price might come back, probably here, push up, and then come back to take it out, and then push up, right? Right? But if price starts coming down from here, let's say price start coming down aggressively now, I won't this will not be I won't be able to try to take trade here until I will have to wait. Once price comes here, I want to see how price is reacting. If I see a bullish engulfing kind of form, very strong bullish engulfing kind of form, then I will not be confident to say, okay, I cannot take the trade, right? But hence price dropping with aggression, I can't try it, right? So this is why the concept of liquidity is very, very important, because it's going to help you to save unnecessary it's going to help you to save your money from the market, right? So the same thing is applicable here. Look at this trade. How did I enter this trade? We have a structural liquidity fund, right? So we have this sweep of liquidity here. What do I mean by sweep of liquidity? If price is in a downtrend, please pay attention very well. If price is in a downtrend, price is pushing down, and then market wants to go up, it takes out this low, a kind of a break of structure, and then the next thing we see is it push up, giving us a change in character, right? Giving us a change in character. So this low we have here, this low we have here has been swept by this previous by this last push here. So it becomes our sweep of liquidity. Sometimes you see it form like a weak rejection candle, right? You see it form like a weak rejection. Many times you see it form like a weak rejection candle. Sometimes the candle still body close, right? So this is your sweep of liquidity, your break of structure. Then what do you want to see? You want to see price retrace and then boom to the upside, right? So that's I'm explaining concept of market structure concept of liquidity sweep. So look at this chart here. We see this market dropping to the downside. Remember, the major trend is uptrend, right? So we see this market dropping to the downside. We see it dropping down, and then what did price do? Price took out the last low, right? You can see it. Like I said, it usually occurs with weak rejection, sometimes with candle body too. So you can see my listing here. I marked it out here, right? So this is the sweep of liquidity, right, that we have. What does this mean? It implies that price have took out all the people that are buying, that are selling, or that are buying, or that are willing to buy at this level. Price have triggered their orders at this particular level, and it have stopped sellers at this particular level, right? Then what do we now expect? We expect to see price to take out the low that caused that break of structure, the high here that caused this low, right? So once price takes it out, you can see price took it out here. This is our change of character. Price took it out. What do we now want to do? We want to look out for the demand zone that price used to take out that level, which is this demand zone we have here. And what validates this demand zone? What validates this demand zone is, one, you can see our FVG inside, our fair value gap inside, right? Then you can see our liquidity level. We have this push up, push down, push up, push down, push up, push down. Then we started having something like this, and then price dropped very aggressively. So from the types of liquidity we have, we can see that this is a trendline liquidity. We have first touch, second touch, and third touch. Let me extend that. We have first touch. Let me quickly delete this. We have this first touch, second touch, and what, third touch, which is trendline liquidity. So what do we want? We expect price to come and take out that trendline liquidity. We're expecting price to come and take it out, right? So you mark your demand zone and wait for price patiently. Even when price got here, even when price got to this level, even when price got here and started acting like it wants to buy, there is nothing to panic. Always wait. And one of the ways you can confirm that price is actually going to one of the ways you can confirm that price have taken liquidity is that once it's coming, it usually drops with aggression like this. You see it will usually drop with strong push, view, PM, clear them out, just like this one we have today, right? This trade. See, anybody that sees this particular move will be afraid to take this trade. Anybody that sees this aggressive sell will be like, this kind of sell cannot take this trade. Why? Because it looks so scary, right? But me, I understand that this is liquidity that price is coming to take, right? So that was why I immediately came. As a matter of fact, my entry was this at this around this level. Around this level was my entry, not even here. My entry was around this level because as it put, I waited for it. As soon as it came here, pushed down more. That was when I entered more trade because I have this fair value gap here, so I know that price was still coming to tap on that fair value gap again, right? So this is your trend line liquidity. We have seen our structural liquidity, our trend line liquidity. Then let's look for double bottom or double top liquidity. Let's look for double bottom. Okay, here we still have here structural liquidity, another structural liquidity here. This is our liquidity level. This is our liquidity level here. And whenever price is coming to take out liquidity, like I said earlier, it's definitely going to use strong, like it's going to move very fast. You can see how this candle dropped very fast, right? Whenever price comes to take out liquidity, it's usually like that. It's usually like that, right? So these are another structural liquidity. You can see we have, like I said, you can see our V shape here, right? And then price will come back to retrace and take it out, right? So let's look for, okay, here we still have another liquidity level. So this is our last break of structure. We have this break of structure here. We have this break of structure here, and then price came back to take out this trend line liquidity. We have this trend line liquidity here. We have this trend line liquidity here. Price tapped on it one, tapped on it two, tapped on it three. Price came down and cleared it, right? Cleared it, and then took off from this level. Took off from this level. So remember, this low, let's quickly take this out. This low here caused this break of structure here. This low caused this break of structure. So for us to validate that market have changed structure, we need price to take out this low. You can see that price did not take it out, right? That the price came very close, respected it, and continued to the upside. So that is it. So this is our trend line liquidity. Let's look for more. Like once you have your setup, you are going to definitely see one liquidity level. Either you see a trend line liquidity, all you just need to do is master the types of liquidity so that when you see them, right, when you see them, you know that okay, this is a liquidity level, I need to wait for price to take it out, right? And one of the reasons that validate it is that you are definitely going to have your demand zone unmitigated. Listen to my word, unmitigated demand zone means if market is in an uptrend, and then you have a demand zone here. This demand zone, price first tapped on it here. Which is price has mitigated it. Price has what? Mitigated it. Hence, you see any candle touch on any demand zone you draw, any demand zone or supply zone you draw. Once you see any candle touching it, either wick or body candle touching it, know that that demand zone is mitigated. So chances are that it cannot hold again. For me, if I'm trading, I look out for demand zones that are strong demand zones. That is, it has not been mitigated. Price have not touched it. Candle have not touched it, right? That is a strong demand zone. So hence price has tapped on it before. If price is coming again, I will not be interested. Even if I will be interested, I will want to see price give me a change of character to the upside before I will now say, okay, it's like price is going to hold on that zone. That's when I can now look out to take an entry. But aside that, I'm not interested because price has mitigated it. Hence price has mitigated it. Chances are that the demand zone might not be able to hold, right? Like there are some charts you sent to me. I saw your demand zones. Your demand zones were already mitigated, and hence it has been mitigated. It's no longer valid. For me, it's no longer valid. All right, so that is it for liquidity. Remember, we have trendline liquidity, double top liquidity, double bottom liquidity, structural liquidity. So just take your time to watch this video again and again until you understand these four concepts of liquidity and be able to identify them on the chart. So look at this trade we have here. So I'm waiting for a price on this. This is USD JPY, right? So on this analysis, you can see we have this last break of structure here, and then we have price push all the way here, right? And before price started retracing, right? So we have this demand zone here of 15 minutes. So you can also this 30 minutes time frame. We have this demand zone here. We have this FVG. You can see price came and tapped on this demand zone, right? As soon as price tapped on it, I can't just jump in. I need to see something to validate that yes, I'm going to be taking this trade, right? I have to wait for price. You can see how I marked it out as a sweep of liquidity. I want to see price to take out the low that caused this high that caused this low. I want to see price take it out, and you see how price took it out, right? It became a change of character to the upside, right? That's a chart, a change of character to the upside, right? So what am I anticipating? If I look down here, I can see my demand zone, I can see my fair value gap, and I can see my structural liquidity here. This is a liquidity level or liquidity range. You can call it liquidity range. You can see how many candles form there. 1, 2, 3, 4, right? So this is a liquidity level here. What do I need to do? I want to see price. Once price comes here, some people will try to buy from here, right? So price might do something like this. Okay, this is an inducement level. This is an inducement level, right? What's inducement level? Inducement level is a zone that is a trap, either a demand zone or a supply zone that is a trap, right? So this is an inducement level. So some people, once price is coming down, some people will want to buy from here, and what is going to happen is it will do like it's want to buy, and then an aggressive sell will happen, take them out, come to this demand zone, and then continue to the upside. So these are inducement level, right? Next time we look at inducement. So we're not looking at inducement today, right? But it's still part of liquidity because it's a trap, right? It's a trap that price forms in the market to use it and trick people, right? It forms fake supply zone, fake demand zone for people to jump in, and then they become liquidity. So inducement is still liquidity because once you become a trap, price is going to liquidate you, right? So that is it. So you can see the trade setup is very clean and correct and very clean, and you can see how it is very clean, very clean. So what am I anticipating? Probably by tomorrow I'm expecting price to drop back into this, fill this fair value gap, and then what, continue to the upside. So that is just it. Is as not really as easy as though, but it's very much well to understand, right? So this video is going to be updated, and take your time to watch it again and again. Thank you so much for your time for today. I believe you have gotten something very crucial, because this is what is going to shift you from people who doesn't know what they're doing in the market to someone who knows what is doing in the market, right? Because when you enter the market, you are conscious of liquidity zones, liquidity levels, liquidity traps, right? So that you don't become liquidity. It helps you to increase your win rate by 20 to 30%, right? When you understand the concept of liquidity. So that is it for today. So I'm going to be uploading the video. Take your time to watch it again and again and again until you understand the concepts and digest it very well. Thank you so much for watching. Do have a wonderful evening.